Hey, it's Mack with PriceActionTradingSystem.com. It is Tuesday, it's August 25th. This will be our chart lesson for today. And another very similar today as to what we had yesterday. This time it started off to the upside, and then we really kind of went into this range. Turned out to be a two-tiered range. Basically, once we started going lower here, you just measure the first range and put your line down there and you look for that to find kind of support. And it went through a little bit, but ended up acting support before it went on lower. And, this is when you really knew once we started going lower right here. And you can see all these shorter term things that are in here. I mean, there's just really a lot of price action. So even at this level, there's so many other levels. And that's the beauty of price action. It works on every level. Um, and what I mean by that is that if we went to a daily chart, we could still find all these same trends, channels, and within that daily chart, you could find shorter term trend lines or longer term things where you could go to a monthly chart. So that's the beauty of price action. It works on any level and any price chart, any market. It all works the same. Each market may have a slight personality of its own, so that's why I think it's important. I mean, it's my opinion that you need to find one market and become an expert at it. Don't try to trade all these different markets. You don't need that. And once you really understand that, it makes a whole lot more sense. So anyway, needless to say, I only marked a few trades today. Well, I say a few, but I marked 10 trades before by 10:30 this morning. And if you couldn't find a trade or two out of by 10:30 this morning, and make some pretty good money, then you still had lots of opportunity all day. Um, but if I wanted to mark every trade and talk about every trade, we'd be here for quite a while. So I'm not going to do that. I'm just going to show you really what I saw on the big picture, and then I'm going to talk about these 8 or 10 trades, and then we'll call it a day. The bars are still a little bit large, but it really doesn't matter. That's not that important. We talked about that yesterday, what you have to do to circumvent that. I did want to read an email that I got from one trader. I believe I saved her email. Yeah, here it is. Um, she sent me an email and it just says basically signal bars this morning. And actually, I think this was a reply we talked about yesterday. But she sent me this email today, and I thought I would share it because I think she's spot on. And I've watched this trader mature over time. I can remember her first emails, her sending me, and really not having a clue, but she gets it now. So it's just, and the reason I like to share this stuff because it shows you there's other people living the same issues and problems that you're probably living, and that there is a light at the end of the tunnel. But I'm going to read her email to you. It says, "Hey Mac, I wanted to drop you a quick note this morning. I decided not to adjust anything yesterday and just traded as I've been doing today. As you know, I've been doing quite well at reading price action for a while now, so having to sit on the sidelines the last few days has been just killing me." And she put exclamation marks there, multiple ones. Especially when I see my setups and they all work. I just can't get myself to take more than a 2 point stop when I've never done that before. I'm a creature of habit, so for me to change something that seems drastic would be out of the norm. Um, and just to comment on what she said so far, I agree with that. That's what I said yesterday. If you don't feel comfortable, don't trade, because even if you're reading it right, when you're uncomfortable, that's when your mind starts playing tricks on you and you make mental mistakes. So that's a very good sign of maturity on her part. So I've seen her mature as from a beginner to really getting it, and having that discipline and that intestinal fortitude to say, hey, as bad as I want to trade today, I know it's not for me, and I better sit on the sidelines. But she sim traded like I suggested, and she's proven to herself that hey, this stuff really does work no matter what's going on. So that's another good point. But anyway, she goes on to say, my point I'm trying to get at is once you get this down, price action works on every level, and if you stick to the rules, you will be profitable in this business. So just like I just said a minute ago, she's saying the same identical words. It sounds like me talking. I remember thinking, how am I truly going to get what Mack is talking about? She's talking about in the very beginning. Being so frustrated at the time when all I ever did was look at charts, study, read, and so on and so forth. But, and she puts that in capitals, I have to say, if you stick with it and you don't give up, it gets easier and easier with time. Anyone who truly gets it will know in the end what you mean when you say you'll get it. It just takes experience. And she has a nice smiley there, a big smiley face there. So that being said, even with it being so hard for me to sim right now, I know for me the right thing to do is to not trade live again. That shows great maturity on her part of and progress, more than anything, progress. One of the best things a person can do for themselves in this business is have discipline and to do what they feel is right for their own personal trading. Once again, thanks for all you taught me. I really appreciate it. Have a great day. So I like getting emails like that. So if you want to share anything anytime, um, please send it to me. Because this is the kind of stuff that keeps me doing this every day, because it's people like her that are getting it, and it's made a difference for them. And I say that all the time, is that a lot of this won't make sense until you get it. You get the naysayers, but they don't get it. They don't understand. And then you get people that come in and they don't get it, but they say, hey, I'm going to give it a fair shot. I'm going to give it a chance. And they do that. And then they come out like this lady's come out, um, and they finally get it. And they're becoming a trader. There's no doubt in my mind. I knew from the first few emails I read about from this young lady, was that she's going to be a trader one day. And I have no doubt that if she's not right there at the cusp or actually across the finish line, she's real close. And she shows, like I said, she shows great maturity and discipline in the fact that she was able to sit on the sidelines today. And she was able to fight that urge that her mind plays on you, that, hey, I got to trade, I got to trade, I got to trade. If you won't take a day off, I used to be the same way, and I remember, and it always led to problems. Now I can't wait to take a day off, and I could take the week off, and it doesn't bother me. But I won't make any money that week if I do. So, you can afford to do that more weeks than you probably would with any other job. But you still have to show up and work every day. This is a job, and that's another thing I try to tell people. This is a job. And if you treat it like so and you respect it like it's a job, um, it's going to help a lot. This is not a get rich quick scheme. And I got an article that'll be coming out tonight. So I've already written it. I've got it scheduled to post later on this evening. So be sure to catch that. I talk about some of this stuff in that article. And it's free, so anybody can go to the website. Anybody that wants to can go to the website. You don't have to be a member to read this one. I think it's a real important one. So, uh, but anyway, let's talk about some of the trades. Let me back out a little bit again and just show you a few things. We had the trend going up, then we had a break, and we had a new high by a tick or two, then we had one coming down. It was kind of a spike in a little two-tiered channel. We had a break, a new low, then we had one going up. We had a break real quick and then an overshoot. It may be a little flatter, but I believe this to be it here. Let me back out just a little bit, make it easier to see. And I got this trend off the first few bars down there. And you see we got a break early and a big rush up. And then we sold off. And this was a spike and kind of a channel down. It looked like, at this point, it looked like it was going to be a more reasonable day compared to what we had yesterday. But in the end, we sold off. And once we started going lower, you should have already had this line here from when we broke lower here. I really thought we would get there at that point. We didn't. And there's actually a trend line here. I'd be chewing you guys out if you didn't have it on there, so I'm going to put it on there. But then you have this one working down. You see it came back into play. But in the end, we had a bigger two-tier channel here. And we had a break. And that's what gave me my target of way down here. Because once we started going lower here, you got to assume that there's another tier. And you just get a measured move over. And look where that bounced to the tick. I had that, and I promise you, I had that line in there long before I had that line in there, long before we even started this move down, because I suspected that with the price action looking like this, that there's probably going to be another tier to this. You don't know that it's going to be there, but you could have this line in place as soon as you had this one in place. You just drag it to the bottom of the price action. And so it's really rewarding when you have that line there when prices are up here and you watch them go straight to it and turn to the tick off of it. And you can see down there it turned to the exact tick. And people will comment, you put these lines on here after the fact. That's not true. If you can go see my, you can go look at some of our midday charts and you'll see I have a lot of these lines on there hours and hours before they are really proven to be right. And it's a skill. It's just like any other part of reading the chart. It's a skill, and you'll get better at it. I can glance at this chart and see this stuff. What's really exciting, though, is sometimes I don't see something, and somebody else will send me their chart, somebody that is trying to learn, and their chart will have something, and I'll say, oh, yeah, I missed that. And they saw it, but I didn't see it. So that doesn't happen very often, but it does happen. So even I miss stuff, and sometimes you don't need to see the bigger picture, because if you just pay attention to the shorter term stuff, it gives you what you need. In this case, you really didn't need the big picture here on this bigger two-tiered channel working down, unless you wanted to find this target down here. Even then, you don't know that it's going to come into play for sure, but once you're heading lower, you got to assume that, hey, that's probably the most likely place, and then it bounces to the tick off that. Still ended up going lower after that, but that's because it's a big two-tiered channel working lower. So anyway, early on it looked more, we had this trend coming up, but it played out, and it looked like maybe we would just go into a trading range and maybe even bounce earlier and try another leg up. As much as we sold off, it wouldn't surprise me to see a big rally day like that. But it turns out we just traded back down and tested the lows again. You can see that we actually went a little bit lower than the overnight lows. We still haven't tested that low from yesterday, but I suspect we will test that low again probably before we go higher. That's a pretty excessive low, so it's possible we don't get back down there, but I would suspect at this point that that's going to be the minimum target, that we're going to test that again and maybe even go a little lower. So just be prepared for that. So let's talk about the trades that I saw from 7 to about 10:30. And of course, when I came in, we had this channel working up. We had a break, and we didn't quite get a new high, but notice all those matching highs, and then look at these matching lows. So when it bounced here a couple of times, you don't want to be going short here yet. It's actually tempting to go short here, but this was before I got here, so this was already, prices were in play when I walked in the door, and it's pretty obvious there's a trading range here. And so when it bounced the third time here and gave you this nice bullish bar, I like that for a long. I just didn't really see anything. You don't want to go short in here because it's so close to this support line across here. You got to be careful of that. So you don't want to go short in there. The likely thing that'll happen if it breaks lower is it ends up trapping you and going back up. So when we tested this for like the third time and turned up with that big bullish bar, I like that for a long. And your hope is it's going back up to the top and make a new high, try to make that new high, but at the very least, you're probably going to test this little double top, but look at it go. It just takes off. And it actually pulled back here and went higher again. And it's tempting to enter there, and you could really, I probably should have marked it green, but when the volatility is real high like this, you want to take the best setup. So I'll go ahead and mark it green. But it's a little bit aggressive. And it's easy to see it after the fact. It's a little bit more difficult when when it's in real time, and especially when the market's been this volatile. So then we start working down. There's a failed second entry long right here that went higher and turned and went down. So again, it's probably should be at least green, but I didn't like it because of all that support across there. But it really could be treated like a breakout pullback long. So again, I probably should mark that one green. So you see there's even more trades in here than what I marked. Um, I generally only mark the sure things that, most people should be looking at. Um, but then when it pulled back again, I really treated this as one move here. And so this is almost like a failed second entry long, but notice how it went way up, turns down, it closes inside the trend line, gives you a big bearish bar, and it's coming from under the EMA. I like this one. That's a big bearish bar. It took a few minutes to get going, but this turned out to be a good trade. Um, and there was actually another chance to enter right here, but with that overshoot, a lot of times that leads to your break. And so, there was that little, um, this is not really a gap. It actually kind of filled it. It closed on its high and opened on its high and traded up, but then it come back and filled the gap. So it's a retest of that area, because a lot of times what happens is there's still buy orders left in here that didn't get filled, and that may be a reason why it shot up real fast like that. But I'm guessing the overshoot has a little bit to do with that as well. Well, I had an interruption. I paused it, and then I thought I came back and started the video back, and I don't know where I left off, what I've done or what I haven't done. And I had a nice little 10-minute spiel there that I guess I wasted my time with. So I hope I went over all the trades. I think I went over all the trades. I'm not going to go back and do any more. It just seems like lately I can't do a video without 100 distractions, the phone ringing off the hook, people coming in the office. So I apologize if I didn't go through all the trades. I'm pretty sure I did. But just a quick summary of the 5 or 10 more minutes that I talked was just remember that this is a volatile market. There's no reason that you can't trade it if you want, because the price action is always right. It works the same. Just remember that if you do get it wrong, though, the moves are quick to the other, traps are quick to go the other way. Here's an example right here. If you got trapped short, look how quickly it went 8 or 10 points in the other direction. So you don't want that to happen to you. So uh, don't take the aggressive trades. If you do trade live, um, stay with the sure things, the ones that fit all our rules 100% and that are less aggressive. Um, those are the ones you want to be taking. The ones that are more aggressive, like these green ones, unless you got a, unless you've got a thick wallet, stay away from those because they can burn you real quickly. But more than anything, if you're not comfortable with the speed and the volatility, just get on your simulator and sim trade so you get that experience without risking your hard-earned trading capital. And I don't know if I talked about it yet or not, but I've got an article that comes out tonight, and it's going to talk about all the reasons why people lose as day traders. Why, basically, the article is about why most people do fail at day trading, and most do. 90%, the kind of the going rate is 90%. I think it's higher than that, because I think that there's some people that can get by long enough to extend their trading days, but in the end they end up failing before it's all over. So all that will be in that article tonight, and again, it's free for anybody to read. It's not in our premium section, so if you're not a premium member, you can still read it, and I highly recommend it because it just organizes all my thoughts on everything we do and why most people fail, and puts it all in one spot so you can read it and spend 15 or 20 minutes with it and know what's going on. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. Hope you had a good trading day. And if again, if you're nervous with this stuff, stay on the sidelines and just sim trade it and learn from it. Use it for experience. But I'm going to wrap it up. We'll be back again to do it tomorrow. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.